Gavin?
Yeah, I'll come up and just give a quick update on. Since the last month in open banking, a lot has changed, and the speed which we're now changing is accelerating. Probably the biggest and most important event on a global basis is my colleague tomorrow is testifying in the Senate to the senators on what's going on in the world of open banking. Locally, though, within the UK, the open banking implementation entity reached a number of very material decisions over the course of I guess, right through August and into September. The third version of the API has now been published, which takes us right the way through to March. For anybody that's following the trail here, March is a very important date because all of the banks that want to qualify from an exemption to also having to support screen scraping with identity have to get something in place to show to the market by then. So this latest version of standards will enable more of the functionality that builds us towards payments to be delivered and a number of the other artifacts that the market needed. I'd say at the moment the API quality between the 9 banks that are supposed to have delivered is mixed. Some of the banks are really getting there and have been consistent and stable and have reasonable customer journeys. Some of the banks have had weak customer journeys and have had APIs that haven't quite been stable enough, if that makes sense. But I do think they're going to get there. A number of things that have been a particular encouragement. The market has now adopted what they call the FAPI security profile. So the security profile is the bit through which the bank and the bankroll and the fintech roll plug in together. And it's easiest to think of it very similar to a plug in a socket. So if the bank's building a universal socket, you want to be able to come along and connect. And it's really important to the market that that's done in a consistent way. Otherwise, it'd be like buying an electrical device and having to wire every socket yourself to make it work. So having that consistency and that global standard of what they call the financial API has been a massive breakthrough. In addition to that, open banking in the UK has introduced some standard implementation requirements. These are things which all parties, both the bank and the bankroll and the fintech roll, are able to know when they've done the thing right. It's like a proper, thorough checklist of all the things they must have to be in the market. That's being backed up with an increasingly broad and competent suite of conformance testing tools. So rather than relying, as was envisaged in the Payment Services Directive, on things being widely adopted, which is not really fair in the banks, or being widely available, which doesn't talk to their quality, we're now able to bypass those two principles and just say, does it work, and actually use automated test suites against it, which is a massive breakthrough. All in all, I would say if you were to judge the UK's delivery of open banking, it's coming along well, and that all of the policies that we need to actually deliver it properly, I'd say are now more or less there. There's still a few things relating to the delivery that need to be tightened up, and just a consistency of that which we'd like to see. One of the things we'll use to drive that consistency is we're starting to build a toolkit of management information or key performance indicators where we start to surface up to the public the quality of the delivery. At the moment it's all just a bit hidden. So I think in the next few weeks we should start to see some of the market metrics come forward. In the regulatory sphere, the European Banking Authority is yet to publish their prognosis on the exemption, but helpfully that's where the banks don't have to also support screen scraping. Helpfully, the Financial Conduct Authority today published their guidance on that, and that's also going to try to help illuminate what the regulated fintechs can do. There's various bits of confusion around what they're entitled to do with their regulated status vis-a-vis offering their services to other fintechs to piggyback on their permission. So I've not yet read that document, but I spoke to the FCA this afternoon, and I'm hoping when we do get through it that process leads us to a good output. The consultation on that is to be finished and input by the 12th of October. So we've got a few weeks now just to turn that around and make sure that the regulators hear back what the market's needing to take it forward. I think that the European Banking Authority and the FCA will be heavily aligned, so I suggest, without knowing the truth, that there's probably going to be quite a lot of similarity in how the FCA has interpreted its approach, taken from the research that the EBA did at a Europe-wide level. Other than that, the one thing which I can sort of seed out without being able to give the full facts at the moment because I don't know them, the scope of open banking has a number of conversations going on to move it beyond just payments and into loans, investments, mortgages and pensions. There's a pensions task force which is looking at the transparency in that market about how people's pensions get surfaced. So from a UK perspective, I'd imagine that once we get through Brexit, whatever that means, we'll get on to actually delivering the wider lens of open banking with all these other artefacts in it, which will be tremendously exciting for the market. And with that, I'm going to make a dash for the train station. Thank you.
So you can't ask him any questions, but he's on email.
If you want me to take a couple of questions, I can cut for.
Is there any burning questions for Gavin? He is on email. But
so you mentioned the screenscraping quite a few times, Jane Clydesdale Bank, and as a fallback mechanism, and it's kind of been your opinion before now that that wasn't maybe acceptable and the screenscraping plus would be. And it sounds from what you said that there's almost a different view in that, but maybe hasn't filtered down to the industry that as a fallback mechanism, screenscraping will be acceptable.
So the crux of it is that nobody in the industry was ever bothered about the screen scraping bit of what's known as screen scraping. The bit that was of concern was the credential sharing that led to the screen scraping. It says in the level 1 text of PSD2 that the TPP, the fintech and the fintech world, will be able to rely on using those credentials to link to the bank or the credit card. In the UK, we obviously selected as our primary route the redirection model, where the fintech's linked across, and hopefully most people understand how that works. That's the guidelines I was referring to. No, the situation is that the fallback position is the credential sharing through to screen scraping. So you share the credentials, you scrape the data, but you have to identify to the institution that you're connecting to that it's not the human that they think it is that's connecting, but actually a regulated actor. And from September the 13th, 2019, I understand, unless they create further wiggle room due to the timetable, and I think that's very possible, that the thing may, that if you're a fintech, you'll have to identify yourself if you're using that method of access. Some banks may say we're not supporting that level of access because look, we've got an exemption certificate from our regulator, but the clarity of how that plays out is the big issue at the moment.
And hopefully that FCA consultation.
Yes, we'll take us some way towards that. Okay, thank you.
Cool.